Hi, this is Optimus Futures, and we're here with our weekly roundup of key futures markets for our viewers. This past week, we noticed quite a few prominent moves in the 5 key markets that we analyze. So let's go about talking about them. And we'll start with the light crude oil futures market as usual. So this market has really been it's now in a full-fledged uptrend that basically triggered off of the 4,200 round number support. Once again, no surprises at all why price, when it hit this level, bounced off so hard. But what was truly surprising though was to see how price was able to really push through all of these important long-term resistance levels with ease. And that really tells us a lot about the momentum that this uptrend has been in. The only real exception to that was this small period of consolidation over here. That really wasn't threatening at all, because once again we had a very prominent former resistance level that could have easily turned as support should price, in the case where price would have potentially pulled back to it. But we really didn't even see that at all. We just saw a minor phase of consolidation over here, and this candlestick really just broke past it, and since then it's just been a ride up, and we so far have no signs of exhaustion at all. And that brings us to an important point. Now that this market is at an all-time high, we really do not have any major areas such as horizontal support and resistance levels like these, or even singled out swing highs and swing lows that we can use as potential trouble areas and really mark them out for this uptrend. Essentially, we're just limited to following the candlestick action and the market action as it unfolds, and really just be able to pick up as many cues as we can of a potential reversal or a hold up in momentum that could lead to a minor or even an elongated pullback into this market. So far, we do not have any such signs of momentum exhaustion. These could include anywhere from picking out divergence using a technical oscillator to candlestick patterns like bearish pin bars and bearish engulfing patterns, and aside from that, just regular candlesticks that are low on volume and low on range that could potentially tell us that the market could really just be either rounding off or just being ready for an extended or a minor pullback. So far, we just have all the indications of the uptrend to stay intact, and that's really what we're expecting as we go forward in the following week. Our bias for this market continues to be towards the upside. Okay, so the next market we're going to be looking at is the S&P 500 E-mini futures market. Another market really that's just been in a very extended long-term uptrend, and where momentum really just shows no signs of exhaustion at all. This is also another market that's pretty much sitting at all-time highs, and again, like with the crude oil market, we really do not have any history here to mark out any important trouble areas that we believe could potentially hold up price. The only thing that we can again look at is the way we're seeing candlesticks form, any possible signs of long-term divergence off of a technical indicator, and aside from that, we could just be looking at round numbers for a potential holdup, because we know that round numbers usually attract a lot of order flow, and if there are any potentially short sellers waiting to cash in on this market, they usually like to be stacking their orders around round numbers. So far, really, there's not much to analyze in this market except the fact that it just continues to be very strong, and our bias just again continues to be to the north unless we see any major signs of a holdup, which are pretty much non-existent as of now. Okay, so the next market we're going to be looking at is the gold futures market, and again, a market that's just been very strongly uptrending over the recent past. Again, no surprises really why price bounced off of the level that it did. Again, a very dominant support trend line, rising trend line, and that's precisely where price bounced off of. Again, we see the phenomena where price is just really crashing into the level, and we've discussed in the past that when price really crashes into a level, there's more times than not, price will basically bounce off of that level. So we see a similar situation sort of develop over here as well, where price was really rapidly dropping into this former support over here, and just bounced off just as hard. And we saw a similar situation develop over here as well, though it was spread out over more days. So we don't have really long-ranged candlesticks and days of action here, but in general we can see that price really was just dropping down with pretty much no support at all. You can see that we had a support level over here that price just did not respect at all, and just continued to drop and just bounced off of this support level formed off of the rising support trend line. So over the past week we discussed that the holiday season basically saw price pretty much push straight through this former resistance level, and we discussed how we do kind of expect the price to pull back to this level and gain some fresh order flow for the year. Maybe some more buyers waiting to get in on the market on a pullback in the new year at this major former resistance level that can now potentially turn into support. We so far do not see that happening at all. We did see a minor hold up here for a couple of days or so, and then on Friday we saw the market sort of tick higher, which tells us that we could potentially continue to trickle higher all the way to this major resistance level. A lot will then of course depend on how price sort of behaves as it hits this major long-term high. But just given the fact that we did not pull back and did not test this level on a more rounded attempt, something like this, tells us that market is really just interested in, it's actually more interested in testing this major high as opposed to this level as support. And so our bias of course continues to be to the north for this market. Just looking at the momentum that the market is in, and we do suspect that in the following week, if the momentum sustains itself, we could very easily see price test the 1360 former major swing high over here. Although we, just given the fact that it's such an important swing high, we do not believe that price will be able to really push through this level extremely easily, and we do suspect that price will potentially hold as resistance over here, at least for the short term. We do not believe that this is going to be a reversal point for this market, but we do believe that this is a very, very important trouble area, and perhaps an area where we will potentially, and we will likely see price at least hold up for a while. Okay, so the next market we're going to be looking at is the Euro futures market. This has been a very interesting market, one of the most interesting markets to follow in the recent past. In the prior sessions of the weekly follow-ups that we did, we talked about this head and shoulders pattern that did not exactly work out. Price did sort of break to the downside underneath the neckline of this bearish head and shoulders pattern, but didn't amount to much at all. Price just pulled right back above the neckline, pulled back, held as support twice, first on this occasion, and then on this occasion, and then just continued its way up. But in doing so, we actually ended up building an inverse head and shoulders right off of a bearish head and shoulders. So a bearish head and shoulders actually turned into a bullish head and shoulders pattern, or close to it. So we had the left shoulder over here, the head over here, and the right shoulder over here as well. And boom, there we go. So we had a new neckline around this level, which sort of forms at the base of the two shoulders of the bullish head and shoulders pattern, and then stretches all the way to the base of the head of the bearish head and shoulders pattern, as well as the left shoulder of the former bearish head and shoulders pattern. So it's kind of a complicated story, but an interesting one nevertheless, because we basically saw a bearish head and shoulders pattern fail and turn into a bullish head and shoulders pattern that just has worked out perfectly. So essentially we just had a break of the neckline of the bullish head and shoulders pattern. Price pulled back this prior week almost to the neckline. It did not make it exactly, because essentially we just bounced off of the 1.2 big round number, which was right around this mark over here. and we've just really bounced very hard off of that level. And so basically, what this bullish head and shoulders pattern has been able to achieve is a very swift and a very decisive move away from this major former resistance area. We had price basically bounce off of this area thrice, and now that it has made a very definitive move away from it, we suspect that if price does make a pullback again sometime in the future to this level, it should likely hold a support. If it does not, again, we will then see price sort of trickle down, maybe pull back, hold as resistance over here, and then continue to be more sideways following this very extended up move in the past. On the contrary, if we either do not see a pullback at all, or if we see a pullback and price hold as support at this form resistance level, we could likely see price really just continue its way up. Notably though, if we zoom out on this market to look at the history for any further indications of support and resistance and potential trouble areas for price, we see that we have, first of all, a 1.25 round number right over here, which sort of lines up with this consolidation phase that we witnessed at the 1.25 level way back in the past in 2016. And so that really will be our target for this market for now. We believe that in the near future, in the following weeks, we could see price potentially hit the 1.25 round number, and this may also prove to be a trouble area for price in the sense that we could see either a hold up here, or maybe even a pullback to create a correction into the uptrend, or who knows, maybe even a reversal at some point. But for now, we're just looking at the 1.25 round number as a potential price level that this market could hit in the coming week or weeks. Okay, so finally we look at the 10-year Treasury note futures market, which is sitting at a very interesting location. So essentially, we're sitting right at this extremely important support level. We had two instances in the past when price extremely aggressively bounced off of the 122.30 support level, and we're pretty much sitting at that area now, which could trigger some people to believe that we could see a violent and an aggressive sharp pullback off of this level again. However, we'd like to notify that on this occasion we have a very striking difference which runs really counter to each of the prior occasions when price was at this level. So you can see that on both these occasions we basically have price falling extremely sharply into the level. So you can see the range on this bearish candlestick over here, and similarly you can see that the market sort of gapped down over here and just was very, very aggressive in making the move down to this support level. Usually, and we've talked about this earlier in the video as well, and we've even talked about this phenomenon in earlier sessions of the videos that we did in the past, that when price usually falls extremely sharply into a level, more times than not it will bounce just as sharply as well. So besides these two occasions, you can see a similar phenomenon unfold over here. Once again, we're sitting at a more shorter term support level over here. Price makes an extremely dominant, strong move down and then bounces just as sharply. Contrary to all of this, over here, we do not see that decisiveness in the move down into the level at all. Of course, we have a dominant downtrend in general and at large, but we do not have that sharp move that we usually like to see when we're anticipating strong bounces off of support resistance levels or trend lines or any other forms of support and resistance. So if you can see in this downtrend here, we've just had very, very regular pullbacks into this downtrend. So you can see if I just mark it out with these green arrows, it sort of makes it obvious that it's not a very decisive and strong sharp move down into the support level. That clearly does not mean that we are in any way indicating that price will not hold a support at all at this level. In fact, it already is holding a support. As you can see, we have wicks to the downside on two daily candlesticks already. So we're seeing some signs of a hold up for sure. But what we're touting against is expecting the price is going to be bouncing extremely sharp off of this level. At least that's something we believe Of course, the market has that element of surprise factor there, and we could definitely see a very strong bounce off of this level. Simply given the fact that it's such an important level, could mean that there could be a very strong gust of buying that could come into the market next week, and we could see the market sort of behave exactly like it did on the two prior occasions when price was at this level. But we're just saying that simply looking at how price has trickled down into the level gives us some evidence to believe that even if we do see a bounce, it may not be the strongest bounce right from the word go. So instead of expecting a very sharp move back up next week, we could potentially see something like maybe a pullback, an initial pullback to this short-term former support level. Price finds some resistance here, pulls back again, maybe onto the level, maybe down to the 122.32 level again, and sort of make another move back up, pull back, and eventually sort of be able to create a bounce off of this level, which can possibly be termed as a more laborious pullback or a bounce off of this level, which would obviously run contrary to both the former occasions when price bounced off of this area. That's really just our expectation, and that's obviously stemming from the way that we've seen price unfold as it fell into the level. We suspect that price will definitely find some major support at this level. Whether it would be good enough for a complete reversal, like on the former two occasions over here, where we saw extended moves back up, that's too soon to say. But just looking at the way that price has dropped into this level suggests to us that we may possibly not see a bounce as strong off the level as we did in the past two occasions, and who knows, we may even see price sort of eventually dropping down underneath the level, pulling back, holding as resistance, and just continuing on with the downtrend over here. That obviously remains to be seen, and a lot will of course depend on how price unfolds the next week as it unfolds around this extremely important support area.